right now is by far the riskiest thing you can do. All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk to you about investing. So we will literally be talking investing today. I want to talk about how people invest their money, what the risks are, and I want to start out by saying, if this sounds boring, this is probably the most important video that I will make all year. So if you just watch one of my videos, I would ask that you stay tuned, and if you need to jump around through the chapters below because you don't want to watch the whole thing, go ahead and do so. But I just want to talk about a gigantic risk that exists right now and what some of the things are that we can do to avoid that risk or mitigate that risk. So this is not supposed to spread fear and panic. This is just to address an issue that is already there, that has already happened. There are already many people that have lost all of their money, and it was not through poor investing. It was literally the mechanism by which they used to invest. This is an unprecedented situation. It revolves around cryptocurrency. So I just want to have a chat about this and go through what's going on and tell you some of the things that I think can be done and some of the things that I do to protect myself or at least mitigate myself against this risk. Like everything, there is risk in investing in cryptocurrency. So we all know there's risk, and there is no investment that is risk-free. That's just not how it works. But there's a specific new risk that is becoming more prevalent that I want to go through, and it's basically counterparty risk, but it's in a way that deals with the actual individual investor. So individual investors are now at risk of potentially losing all of their money, not because they made bad investments, but because the cryptocurrency exchange that they're using defaults and doesn't give you your money back. So I want to go through how this works in the rest of the financial world and compare it to how it works in cryptocurrency right now. And again, talk about some of the things you can do to mitigate that. So this is not an anti-DeFi video. This is just truly talking about what the differences are. We've got to understand these differences. Changes need to be made in the system, whether it's through regulation or through this painful process where it's just the process of elimination as those companies that have made poor decisions go out of business. However, the problem is it really affects the whole entire cryptocurrency ecosystem, because as companies suffer liquidity problems, the first thing that they're going to do to try to solve that is sell their cryptocurrency. So that is going to cause downward pressure on the cryptocurrencies, and that is the beginning of a vicious spiral that certain cryptocurrencies and certain exchanges have already lived the nightmare. So this is not a theoretical thing that could happen someday. This is not some remote risk that you just don't need to think about and this video is too boring and I'm not going to watch it. This is real. It's happening to people right now. If you know about this, you can mitigate it and be safe, or at least safer. And if you don't know about this, there are people that have already gotten caught and lost all their money. So we'll talk about a few situations that I'm sure everybody's aware of. There's the Terra Luna situation, and that really was probably the catalyst to get all this rolling, although something like this was inevitable in my opinion, and this is a part of the process. These are the growing pains. Cryptocurrency is a new asset class, so it is growing rapidly. The adoption is growing rapidly. However, there are no regulations, there are no rules yet that are engraved in stone, and people are testing the waters and they're pushing the limits. So as a result of that, there will be some failures. There's always lessons to be learned along the way, and that is what is happening to the crypto world right now. So I'm not anti-crypto, I'm not anti-DeFi. I am actually a Bitcoin bull at a time when I know Bitcoin is down quite a bit. I'm still long-term very bullish on Bitcoin. I'm very bullish on blockchain, and I think there will be winners and losers as far as coins and tokens go. So there is a crypto world on the other side of this, and I think that it's a big one, and it will continue to grow over the course of time, but it will change. And right now, I want to talk to you about some of the missing links. So there's several different ways that you can invest your money or manage your money or handle your money, all the way from, having cash and putting it under your mattress to putting it in a bank or putting it in a brokerage and investing in stocks and bonds. And now there's also the world of cryptocurrency. So you can go to a cryptocurrency exchange and invest. This is a fairly new phenomenon. A very small percentage of the world investments are invested this way right now, but this will be an ever-growing number, and it will be a highly significant number at some point. The crypto universe did get up to about $3 trillion. It's down about 70%, so it's under $1 trillion right now, but I expect that number to be multiples and multiples bigger 5 years from now and 10 years from now. So we need a way to manage this process. It's the only way that big money will come into this, and it's a part of what is suppressing all the prices. There's a historic amount of money sitting on the sidelines right now, just waiting for some of the dust to settle and some of these issues to be cleared up so that they can get their money into cryptocurrency. And I'm talking institutions right now. I'm talking retirement funds really don't have access to cryptocurrency cryptocurrency right now. All of the large brokerages don't really offer cryptocurrency right now. So the vast majority of wealth is not exposed to cryptocurrency unless they go out of their way to do so. And we know that corporate America has only just begun to embrace cryptocurrency. There's a few standout companies, obviously MicroStrategy being the largest investor out of all of them in the cryptocurrency world, but there are many others. All the Bitcoin miners are heavily invested in cryptocurrency, and there are other companies that hold Bitcoin and Ethereum and alternative coins. So if you have money on an exchange, and I'm going to use Voyager as an example, not to pick on Voyager. I did a deep dive on what's going on with Voyager. You can watch that video right here. It's still a fluid situation, so we don't know if they're going to survive or not. There's an awful lot of big money supporting them, trying to make sure that they survive just because of the damage it would do to the overall cryptocurrency ecosystem. I'm hopeful that they will survive. However, right now they have put a limit on the amount that their customers can withdraw, and that limit is $10,000 in a 24-hour period. So already they're limiting your money. There may be people that have $1 million in Voyager, and if they want to go get it, they can't do it. They can get $10,000 a day. We know that with Celsius, they've frozen all withdrawals. So I hope that those people get their money back as well. However, that is looking less and less likely. And with the situation that's unfolding in Voyager, you know, it is by no means guaranteed that these people are going to get their money back. And again, I'm not trying to spread fear. That is not the purpose of this. I am going to talk about, so please stick around. I'm going to talk about what you can do as an investor to mitigate the risk of all of this so that you can stay involved in cryptocurrency, but at least you'll know what you're doing. You'll understand the risk that you're taking and avoid some of it by understanding it. This is a page on Voyager's website. It says Voyager cryptocurrency disclosures. Cryptocurrencies are highly speculative in nature, involving high degree of risk, and can rapidly and significantly decrease in value. It is reasonably possible for the value of cryptocurrencies to decrease to zero or near zero. So this is their disclosure to their customers. And understand, this has happened many times. We know that really the entire crypto market is down over 70%. Most of the tokens are down in the neighborhood of 90% right now. Okay, then they say cryptocurrency held in the Voyager platform is not protected by the FDIC insurance or any other government-backed or third-party insurance. So they mentioned the FDIC. So if your money is in a bank, it is secured. Right now at up to $250,000 per bank account, and it's insured essentially by the federal government. So now that's banks. I want to talk about brokerages because there are several different forms of entities, and I know that myself included, we all just put money into places, and you know, I don't put a lot of thought at the time as to the differences between these entities, but there are gigantic differences. So if your brokerage is a member of the SIPC, and that is the Securities Insurance Protection Corporation, and I'll just give you a little bit of background on that, but basically that's an insurance program that brokers sign up for and are members of. And when they are a member, your investments are secured up to $500,000 by the SIPC. This happens to be Robinhood's disclosure. So I'm not even going to put my Robinhood link down below because this is not a sponsored video. This is not about an affiliate link. I'm trying to explain how all this works. We have purchased an additional insurance policy for Robinhood markets through Lloyd's of London to supplement the SIPC protection and become available to customers in the event that the SIPC limits are exhausted. This additional insurance policy provides protection for securities and cash of up to an aggregate of $100 million. Like I said, there's risk everywhere. There's risk at the bank. If you have more than $250,000 in one account, you know, theoretically there's risk that you could lose the amounts over that. There's risk at a brokerage account. The SIPC is there put in place, but they only insure up to a certain amount. So a lot of brokers like Robinhood and Webull have taken out additional insurance policies on top of that, but that is still no guarantee that you're going to get 100% of all your money back. However, it is some safeguard against just flat out losing all your money. So in the cryptocurrency world, there's cryptocurrency exchanges. For instance, we know that Celsius just froze everybody's account. That is a cryptocurrency exchange. We know Voyager is going through a very high profile situation right now. And I'm not going to get too deep into that, but essentially there is an awful lot of leveraging and lending going on in the entire cryptocurrency world and with cryptocurrency exchanges and hedge funds. So as a result of that, Voyager has found themselves caught with a big risk in one particular hedge fund, and it is putting their business in jeopardy. Voyager is a crypto exchange. They don't fall under any of these entities. They don't fall under the FDIC. They don't fall under the SIPC. There is no insurance, and I'm going to read to you. I want to go to Coinbase now, and this is not to pick on them either. This is every cryptocurrency exchange. So I want to show you that even a gigantic publicly traded company is not insured. So how is Coinbase insured. This is from their website, the help section of their own website. So Coinbase carries crime insurance that protects portion of digital assets held across our storage systems against loss from theft, including cybersecurity breaches. Cryptocurrency is not legal tender and it is not backed by the government. Cryptocurrency, including but not limited to tokens such as Bitcoin, Litecoin, and Ethereum, and stablecoins such as USDC, is not subject to FDIC insurance or Security Investor Protection Corporation protections. In case of a covered security event, we will endeavor to make you whole. However, total losses may exceed insurance recoveries, so your funds may still be lost. So this is not Coinbase's fault. This is how this works. If you are a cryptocurrency exchange, these are your rules that you are governed by, and essentially it's a lack of rules. So I'm not a big regulations guy, but I do know that trillions of dollars is staying out of cryptocurrencies in the short term because this problem has not yet been solved. And I do expect regulations to come that will have some type of solution to this, that will put some parameters so that currency exchanges can't just do whatever they want as far as lending out money and exposing themselves to risk. It's always lending and leveraging that ends up being the root cause of these things coming unwound. And once again, that is what's happening in this case. So I said I was going to tell you some things that I do to protect myself against this. So the first thing is be aware of all the different risks. Be aware of where you're putting your money. Is it at a bank? Is it at a brokerage? Is it at a crypto exchange? So at least you know where your money is. I tend to spread my money out across different brokerages and exchanges. That way, if one fails, I don't lose all my money because I've spread my risk. So that's one thing that I do to try to mitigate that exposure. I am still limiting the amount that I invest in cryptocurrency until these things are resolved. So for me, that's another thing you can do. You can limit the amount that you invest to an amount that you know you may lose and you can afford to lose. Making your own risk assessment is important. So it may be that you decide to put all your money in anyway, but at least you understand what you've done and you understand what the risks are involved in that. So the other thing that I would do is, like we just looked at, basically every exchange should have in their help section what their policy is and explain to you exactly what your money is insured with, or if it's not insured at all, and what risks there are involved in having your money. Essentially, they are the custodians of your money. And unfortunately, if they are poor custodians, there is really not very much recourse for you to get your money back. So know the policy of the company. If you're going to put money in a company, know what their policy is. In addition to that, there's a website, sipc.org. This is not a government website, so I want to read something from there just so that we're clear. SIPC was not chartered by Congress to combat fraud. Although created under a federal law, SIPC is not an agency or establishment of the United States government and has no authority to investigate or regulate its members or broker-dealers. It is important to understand the SIPC is not the securities world equivalent of the FDIC Corporation, which insures depositors of insured banks. So there is more risk involved in a broker than there is in a bank, and there's more risk even still involved in a cryptocurrency exchange than there is in a broker. So the first thing is you should understand where you're putting your money, which one of those it is, and then you can assess your risk from there. The other thing is you don't have to have your money on any cryptocurrency exchange. You can have a wallet and have your money in cold storage. So if you are a cryptocurrency enthusiast and you want to invest your money in cryptocurrency, I know that most of the more advanced cryptocurrency users, they keep their money off exchange in cold storage because there your only risk is whatever happens to the price of what your investment was. There's no counterparty or third-party risk that some other custodian is going to lose all of your money for you. So that is a giant mitigating factor. You can invest as much as you want, and again, you've got to assess your own risk, but by taking it off of the exchanges altogether, you've completely avoided this risk. So just to sum up, no investment is 100% safe. There's risk in everything you do, but I think it's ultra critical. Right now, leaving your money in a cryptocurrency exchange is by far the riskiest thing you can do. And that doesn't mean that you shouldn't do it. It just means you should understand the risk and make decisions accordingly, potentially mitigate the risk by spreading it across different exchanges and or taking some of it off exchange altogether and keeping it in cold storage. So again, I just wanted to do an explainer video on this because this is happening right now. This already happened to Celsius. Voyager is in the middle of a situation and there's no telling how far this can spread. So it may not spread any further, but it looks to to me, based on looking at the balance sheets of a lot of these companies, most of these exchanges are heavily involved in lending money and leveraging. So as a result, unfortunately, there is risk in this space. So you need to assess your own risk. You need to do your own due diligence, of course, as always. But I just wanted to make everybody aware of this situation so that you can do your own due diligence and make better informed decisions. So that's all I've got for you on this issue. So if you made it to the end, please subscribe to the channel and smash the like button. So thank you so much for watching, and I will see you in the next video.